Where is the market headed? I take my question to Mr. Bavik Mita, joining me, Chief Market Analyst at Century Financial. Thank you so much, Mr. Bavik. Thank you for coming this morning. Let me ask you about the eventful week. We will have many decisions by central banks, especially the Fed. Those results we are hearing from companies, and by looking at the fact that we had said there is a shift from focus on inflation to focus on growth in the economy. Is the or what are the indicators of growth that we should take from earnings of corporates, and how will this impact the Fed's decision this week?
To start with, we've already had a host of earnings in the form of a big tech company like Microsoft, which has reduced its guidance. Tesla numbers were upbeat, the stock rallied like crazy. Fed is more likely to take the global economic cues from the US data like the inflation, GDP, rather than the earnings. So, even if you look at the latest statements from the US Fed, they are quite comfortable in putting the economy into mild recession. So if you look at the last week's GDP data, the employment numbers, the economy is still holding tight. Now, the market's best guess is the Fed is going to halt its particular interest rate hike in the 5 to 5.25 zone. But then again, inflation remains a tricky issue. So if you look at the last week's data, the PCE price index, that is the core inflation GDP index, that has come down a bit. So now, excluding the volatile food and energy prices, it's in the range of 4 to 4.4. So that's a big comforting factor for the Fed, for the markets. So more of the global macroeconomic as well as the US economic cues, that's going to dictate the central bank guidance, and less of the individual earnings that the Fed is going to look at.
If we look at bond markets and the appreciation we have seen in them recently, does it indicate the same direction that we see in stock market? You mentioned PCE, which came unchanged or slightly up, if you like, or slightly down, depending from which angle you look at it.
The stock market is in a situation where it's always going to lag the recovery curve. Bonds, fixed income market are the first one that have already started reacting on the Fed pivot. So, as you rightly mentioned, very eventful week. Inflation numbers again are very subjective because, as you mentioned, it depends upon the way you're going to look at it, month on month, year on year, maybe 2 year befores. But the overall indications are that the good prices are cooling off. Service sectors, the service inflation does remain high. But then again, markets or equity markets specifically, equity traders specifically, always need a reason to look optimistic, look bullish. So this is where the entire comfort factor comes in. Again, fixed income is going to lead the recovery curve. If you look at the latest US Treasury auctions for the 2 year and 5 year bond, the yield curve is again expected to go down. So this is basically a good news for the equity markets too.
So markets and traders maybe they should pay more attention to the data which are telling us or the indicators from bond markets and future guidance more than what their forecasts are for the next Fed move.
What's happening is, if you talk about the tech earnings, the big tech earnings, it's in a way already discounted by the markets. So you would see a scenario where, let's say, Apple or Alphabet comes with a good revenues but a dismal guidance. The individual stock moves or the moves in Nasdaq for that particular day could be crazy. But at this point of time, for the markets, the main comforting factor would be the inflation data and how the labor market, the employment numbers hold. That is going to be the number one reason that's going to dictate the trajectory of the interest rates, the yield curve, and in turn the indirect effect on the stock market.
So the move we have seen in the market in light of the disappointing results and guidance from big tech, it shows that traders are not paying enough attention to economic growth. that we see in the results, and that they are still focusing on
Yeah,
expectations for inflation numbers and the Fed. So we have not seen a shift in focus to growth. We are still focusing on economic data and inflation specifically, right?
perfect. Yes. So even the last week's move, SPX was holding up for the entire weekly basis, despite poor guidance for Microsoft. So maybe a rejoice, maybe a comforting factor that Fed will finally say something that's a very dovish thing in the this Wednesday's meeting. So this is where the entire market guidance is expected to head.
Bhavik Mita, thank you so much
Thank
for
you.
having joined me today. Have a nice day.